Hello, everyone. Good morning, good afternoon, and good evening. Thank you for joining me today with Kathy Svetina, the founder and CEO of NewCastle Finance, to talk about the Healthy Financial House Framework. Today, Kathy will help you get clear on your financial strategy so that you feel confident that you're making the good decisions that will result in a thriving business. And I'm Linda Fisk, the CEO of Leadership Global, and I am absolutely thrilled to welcome all of you to the program today. Leadership Global is the most impactful community of extraordinary women in the world. We unleash the full potential of high-performing and growth-oriented leaders in a confidential, supportive, and private community. Leadership Global helps members accelerate their success by defining their vision, growing their leadership, expanding their influence, and leaving a lasting legacy. If you're interested in learning more about this remarkable community of women leading across business, entertainment, and politics, then please do reach out. Today, you are in for such a treat. I can't wait to dive into today's conversation. You'll learn how big companies use financial information to drive their businesses forward and how to apply those same financial insights to your business. Today, you'll learn how to get clear on your numbers and your financial strategy so you feel confident that you're making good decisions that will result in a thriving business. So, let me tell you a little bit about Kathy before we get going. Kathy Svetina is the founder of NewCastle Finance, a company offering fractional CFO services specifically to women-owned businesses. For nearly 14 years, Kathy did senior level financial planning and analysis for Fortune 500 companies. She started NewCastle Finance simply because she wanted to offer that same powerful financial insight to women-owned businesses. Kathy, thank you so much for being with us here today.
Thank you so much for this invitation, Linda. I'm really, really excited to be here.
Yeah, and we're excited to have you. I know that we're all going to benefit from your years of experience. So let's start with this idea of a fractional CFO. Can you kind of explain the difference between an accountant, a bookkeeper, and a fractional CFO?
Yes, of course. So this is the question that I get most of the time because a fractional CFO seems such a complex title, right? But it really isn't. So the way how I like to explain it, what the difference is between the bookkeeper, accountant, and a fractional CFO is when you think about your finances, who's actually putting all the transactions in, who's actually putting all the reporting together, those are the bookkeepers and accountants. So they deal with the past of your business. They're putting all of this data and information that's going on in your business, all your invoicing, all your bills, they're putting it in your accounting system and they're reporting for it. So basically what they're doing is they're reporting the past of your business. Fractional CFOs deal with the future. So what their concern is, how is your business going to look like 3 months from now, 6 months from now, 3 years from now, 5 years from now? What are some of the steps that you need to take to get to your goals? What exactly your goals are? So they're the people that are actually overseeing all of your financials, making sure that you're using the resources that you have, your cash, your inventory, that you're using them wisely and that you're getting the most return of your investments. Also, if you are a new founder, for example, and you're trying to get founding for your business, they'll be the ones who are going to help you with your financial model. They'll be the ones who are going to help you with your projections. So those are the people that are really there to make sure that your business is healthy and sustainable.
Yes, that makes all kinds of sense, Kathy. Thank you. And I love the idea that a fractional CFO is forward-looking, more of a partner in planning for a healthy and sustainable business. In fact, let's talk about that a little bit. You've mentioned that your goal is to create healthy and sustainable businesses for women-owned firms and organizations. So what does that mean? What does it mean to have a healthy and sustainable business?
So a healthy, sustainable business is really a business that is financially stable, number one, and two, that it's actually supporting your goals and your needs. In the other thing that a lot of people don't forget about when they're running a business is also your business is a part of this ecosystem, right? You have employees, you have vendors, you have suppliers, and when it comes to profit, achieving it is really easy. All you really have to do is like slash up your costs as much as possible. You pay your vendors late. But the problem with it is it comes at a significant cost to you. Because if you don't have those good relationships with your vendors, if you don't have good relationships when it comes to your employees, that's when your business really starts to suffer. And, business is really not on a lone island. We're all really connected and interconnected nationally and internationally. So when you're making decisions in your business, what I like to equate it to, it's kind of like ripples on the water. When you're throwing the pebble in, it just kind of ripples all around. And that's how the business looks like too. So when you're making decisions in your business, there are a couple of questions that you should really ask yourself. For example, the decisions that I'm going to make, how is it going to affect me on the short term? How is it going to affect me in the long term? Does it reflect the values, my values and the values of my business, the way how I build my brand? How is this going to affect the relationships between the clients, the customers that I serve? And, and I also mentioned that, how is it going to affect the relationship that you have with the people who work with you and the vendors? And that's what a healthy and sustainable business is, that looks all of these relationships from a financial perspective.
Yeah, I think that thinking about a business in terms of an ecosystem is really smart. And I love the questions that we should be asking ourselves when we make financial decisions that you just went through. How is this going to affect my business? How's it going to affect me in the long term? Does it match my values and the values of my business? Really smart questions that we should all be asking as we create our own financial framework. So how does increasing sales play into being healthy and sustainable? Sales is literally the lifeblood of any business. So how does increasing sales and projecting for those sales play into being healthy and sustainable?
So when it comes to growth, and when it comes to your sales, a lot of people, what they have this holy grail, I want to grow, right? I want to grow my sales. But the question of it is always, why do you want to grow your sales? There's nothing wrong with growing, but having a clear definition and a clear why you're actually doing it. Because when you have that, you're able to plan for it properly. And when you plan for it properly, you also plan, when you grow your sales, that means you're also going to grow your expenses with it, because you're going to have to plan for your employees. You're going to have to plan, for example, are you going to need more office space? Those are all the things you should be thinking about when you're thinking about growing. And if you're not planning this strategically and looking at it, it can really backfire. You can have quality issues. You can have staffing issues. And the other pieces that I also see, some people want to grow because they have this tremendous cost that they need to support. So it's almost like you're feeding a monster in a way, because you have to have more revenue so that you can afford to basically run your business. But the better way, instead of growing in this particular case, would be to actually look at your costs and see, is there something that I can cut? And again, it has to be healthy and has to be sustainable. You don't want to cut something that's going to come and, backfire down the line. So it's really those things, looking at it. Why am I growing? What's my goal? And how is this going to affect me in the long and in the short term?
Yeah, that's so smart. And as you said, just because you're growing and having an increase in sales, that doesn't necessarily mean that your business is doing well. Yeah. And I think that's such an important point to reiterate, is that growth needs to be properly planned. So, Kathy, you have a framework when it comes to building a financial model that supports a healthy and sustainable business. So can you explain what the pieces of that framework are and how that works together?
So, yeah, there are 5 pieces of it. And finances are a little bit complex. So what I like to do is I like to equate it to a house, because everyone is really familiar with the house. You have the house structure that really needs to be supported and needs to be built right so that it's, it stands the test of time. You have houses that are, 100,000 years old. So when you build it right, it's going to support you. So when you first think about a house, what is it that you really need for it to stand, right? It's the foundation. And that is your accounting and bookkeeping. That is all the transactional pieces that are going into your business that, your accountants and bookkeepers are feeding into your accounting system. It also something that it has to be compliant with the tax and the tax codes and the regulations. So the goal of this is that you have accurate and timely data that's actually coming into your business. And, I don't want to go too much into jargon in this, but this is really important that people understand when it comes to accounting. There are two different types of accounting methods. One is called the cash basis, and the other one is called the accrual basis accounting. So the difference between those two are really important to understand because it's going to affect the rest of the house. So when we talk about the cash-based accounting, it's the accounting that's actually the way how you putting transactions into your accounting system and the way how you're looking at the business. You're only looking at it from a perspective of the cash coming in and the cash coming out of the business. So Linda, what that would mean is, for example, if you send me an invoice that is due, let's say 30 days from now, I would not record that into my accounting system because the cash did not exchange hands. So essentially what that means is that when I look at my reporting that the accountant says, gives me, I will not be able to see that invoice on those reports. So that is a real particular piece of, accounting that doesn't really have as much information that you would want to have. The problem with that is that you can't really build a business on it. The nice thing about it is that it's very simple, and that's why people start looking into it at the beginning. When they start their business, they go into the cash accounting. And then when it comes to the accrual accounting, that is the accounting that really people should be looking at. Because when you're getting the invoice, for example, I would be inputting that into the transactions, and you'll be able to see in your reports that that's something that actually came in. I'm obligated to pay you, even though the cash is not going to exchange hands for 30 days from now, but it's still going to affect my accounting, my reporting, right? So that's really important to understand the difference between the cash and the accrual accounting.
Got it. That makes sense. So when you talk about accounting and bookkeeping, which, as you said, is the foundation, what does timely really mean there? Is there a guideline that people should follow with accounting and bookkeeping? As you said, that's the foundation of the house.
Yeah, and that is something that a lot of people actually, especially with the new companies, is, they don't really update their accounting system, and they don't really put their transactions in until 3 months down the road, or every other month or whatever. When it comes to timely, you really want to put the transactions in every month. And what we call it in the finance and accounting world, we want to close the books. What closing the books means is that you put everything that happened in the previous month in your business, every transaction, every bill you got, every invoice you got, everything, you put it in, and you have that closed, meaning that you know that what happened in that particular month, everything is completely reflected. It reflects a reality that happened in your business, so that you have that insight when you go back, that you know that everything is complete and you can actually make decisions on it. And you want to do that on a monthly basis. So you want to have your books updated and you want to have them reconciled on a monthly basis.
That makes sense. And Trishane asked in our chat, is there accounting software that you would recommend for accounting and bookkeeping?
Yes, there are a couple of them. The two big ones that are really popular are QuickBooks and Xero. And it really depends on your needs and what you're actually looking for. It really depends on the stage that you are in your business too. So if you're just a regular small business, those two would be able to fit your needs. QuickBooks and Xero, look at those two up. Yep.
Great. And then Emily asked, what approach have you recommended, or what is your advice for a startup, a solopreneur without a clear and reliable, steady income stream in the short term?
When it comes to the accounting?
I think so, yeah.
Yeah, I mean, it doesn't, if you're just a startup, you're at a good place because you can put these foundations in place right now. They're actually going to be able to support you better as you grow your business. If you put in right now, you have a good framework to work around, and it's going to be able to support you, especially when you're dealing with investors, because they want to know all the reports, they want to know how your business is doing. And if you implement all of this framework, the 5 P's framework that we're going to go through, you'll be essentially golden when it comes to that.
Right. So Kathy, what you know about where your expertise is, in my opinion, is really financial analysis, which you've equated to sort of the walls of the house, right? And you are phenomenal when it comes to financial analysis. So can you tell us a little bit about that? I'm really curious about the guidelines on how to look at the numbers, how to see the trends, and exactly what we should be looking at in financial analysis.
Yeah, and let's talk about what the financial analysis really is. And as Linda, as you said, these are the walls. These are the structure that is actually going to be able to support your house, your financial house. So the analysis is basically looking at this financial data that you're getting from your accountants, from your bookkeeper, and what you're trying to do is you're trying to figure out what does it all mean, right? What are the insights that I can get from it? So, for example, you want to look at the trends that you see. So the way how I like to look at it is how, when you're looking at the financial report, if your accountant sends you your P&L report, your profit and loss report, your income statement, you want to take a look at how is your particular month trending based on the previous months. Because if you're just looking at, let's say, April and you made a profit of $20,000, that is all great, but what does it really mean, right? What does it mean to the previous months? What does it mean based on the goals that you set, the budgets that you set, the goals that you have? So looking at it, it's kind of like looking at a picture, not looking at a picture through a straw when you only see like a particular little tiny piece of it, but when you're looking at a financial analysis, it's like looking at this whole picture and you're seeing it. How is it actually trending? What does it really mean? And 3 months ago, how did you do? Were you making a $60,000 profit? So when you're comparing it to 3 months ago, when you make a $60,000 profit and now you're making a 20, there's a problem here, right? Is it either you have a seasonal business or something happened, your sales went down, your costs went up? Those are the type of things that you're able to see in the trendings.
Okay. That makes sense. So what we should be looking at in the numbers is really to see trends. It's really about looking at month-to-month variability then when we're talking about financial analysis. Is that right?
Yes. And the other thing that's also the financial analysis is going to tell you, if you have the key performance indicators, for example, those are the type of things that you want to put in your business too. And I recently talked to someone and she had a great example about this, actually. She said, if you were on a lone island and you were on vacation and there was absolutely no internet and you phone into your office, what are the 3 to 5 numbers that you want to know exactly how your business is doing? And those are your key performance indicators. Those are the things that you absolutely need to know so that you can gauge what the health of your business is.
Yeah, that makes all kinds of sense. And I think that there are probably some numbers that are pretty universal, but there may be some KPIs that are unique to industry or to a particular business. But things like revenue and expense structure and things like that, I would think would be areas of financial analysis that would be fairly universal. Can you talk a little bit about what you would recommend as the top 3 KPIs for most businesses?
Yeah, and Sales is definitely one, the revenue. That's one of them. And when it comes to everything else, it really depends on what are you trying to achieve in your business and what is really important to you. And I also want to make an important note here that KPI doesn't have to be a financial performance indicator. It can be, for example, if you're interested in service quality, how your employees are actually serving your customers. That could be your KPI, because that's really important, especially, for example, if you're a restaurant. That is, I used to work in a call center. I did financials for a call center. And one of the things that we would really look at is like, how are those people who are on the phones, how would they serve the customers? Because we had a customer satisfaction questionnaire that we sent them afterwards, and they had to fill that out. So we would actually, based on that, and that was really, really important to us. So we had that as a KPI. So when you're building these KPIs for you, what's important, don't just look at the financials, look at the whole entire business that you have and see what are the things that are really, really important for me.
I love that. So Kathy, let's talk a little bit about the next part of the house. So we've talked about the foundation, which is accounting and bookkeeping. We've talked about the walls of the house, which is financial analysis. And again, the place where I feel like you have such remarkable expertise. But let's talk about financial systems and processes, which is kind of what you were talking about. It's about understanding the tools that business owners can use to help with reporting. And maybe first is to understand your KPIs. I think of the financial systems and processes, as you've outlined, as kind of the interior design of the house. So what are the tools and businesses, or the tools that business owners can use to help with reporting and really understanding the financial health of their business?
Yeah, and you're right. I mean, I like to think of it as an interior design. And just like you would not put a bathtub in the middle of a kitchen, right? Because it just doesn't make sense. You want to use the processes and systems that actually make sense for your business, what stage you are and what the needs are for your particular business. For example, we talked a little bit about what are some of the accounting systems that would be appropriate. And it really depends on what stage you are. So if you are a completely teeny tiny business, for example, a good accounting system would be FreshBooks. As you grow, you might want to look at the QuickBooks and Xero. And then as you grow even further and you have to think about your inventory and procurement and your HR and your accounting, that's where the ERP comes in, which stands for the Enterprise Resource Planning, such as like SAP or PeopleSoft. It really depends on what you're using. And if you're getting to a stage where the software that you're using right now doesn't really meet your needs, it doesn't give you like the insights that you need, that's when you start looking at what can I be using so that it actually makes sense for me more. The other piece is also the reporting piece. What type of reports are you getting? You have to keep in mind that there's three different types of reporting. The first one is the tax reporting, which, it's something that goes to the IRS, and, the government just needs to know how you're doing, how much you're making, so that, you can pay your taxes on it. But that is very different from your basic accounting reporting and your management reporting. The management reporting is a significant piece, because that's where you're getting the reports that are really giving you the insights of what's happening in your business versus just, basic stuff. And how does that look like in practice, right? So for example, if your accountant just gives you your income statement and you're seeing a revenue, I made, $50,000 this particular month, that's great. But what you also want to know is from which customer or from which, who paid you, how they paid you. Those are all the type of things you want to know. And you want to have the reports that are able to give you that information, those insights, so that the systems and the accounting processes that you're using are able to feed that data in the system, so that you're able to pull it out and be able to figure out, how everything relates to each other.
That's great, Kathy. Thank you. And so the final element of your healthy financial house framework is the roof. And you've noted that the roof of the house is financial planning, financial strategy. So can you explain a little bit about that? And really, I'm curious to know, how often should business owners plan? Should it be quarterly, yearly, bi-yearly? What does that look like in terms of true strategy sessions and sort of the review of their financial plan?
Yeah, and the roof is essentially, what is the purpose of the roof, right? The purpose of the roof is to protect anything that's below it. So that means your walls, your interior design, your foundation, so that you essentially, when the storm comes, you just don't get rained on, right? So you protect it. So that is, in a financial sense, that means the mapping the future of your business, setting all the objectives and plans, and figuring out how to achieve them. So in even more simple terms, it's basically defining your goals and figure out how to get there. That's what it is. And when it comes to how often should you plan, it depends on what stage of the business you are. If you're a startup, the way how you plan is different when you're an established business. But if you're an established business, I usually like to give this reference. So when you think about nature, it has spring and fall, and that's where I like to gauge when you're going to actually be doing the planning. So in the spring, when you think about spring, it's for planting, it's for growth. That's when you want to do your long-term planning, your 3 to 5 years plans. You're sitting down really thinking about your business from a 10,000-foot view, and you're looking at it, where do I want to be? Where do I want to be 3 to 5 years from now? You're really taking that time to figure out not only where you want to be, but also how will you achieve that? Are there going to be any new products, any new services, any new markets that you want to enter? So those are the type of things you want to plan. And then in the fall, that's when you prepare. That's when you prepare for the next year. You want to do the short-term planning at that time. So that's basically going to be your budget for the next year. And you want to take a look at it and see if there's any issues that are coming up. You want to be able to prepare for it. Are there any opportunities that you can maximize? And the nice thing about it is when you do this type of planning, they all kind of relate to each other. So when you do the spring planning, that kind of becomes your foundation for the fall planning, and the fall planning becomes the foundation for the spring. They really build on each other. And when you take the time to plan and to put it on your calendar, it's so much easier to do it.
Yeah. Wow. That's clear and easy, because, we all think about growth in spring and planning in fall. So that's super, super smart. Any recommendations on how to plan, what we should be thinking about in terms of creating that financial plan and strategy in both the fall and the spring?
Yeah, and I always say that too, it depends on where you are in your business and how complex it is. But in the basic form of the very basic of planning is, I like to call this the 3-2-3 plan. And that means there's 3 items that you want to plan for. You want to do it twice a year. And there's a 3-step process to it. So the 3 items that you want to plan at a minimum are your sales, your expenses, and your cash. So, and the reason why, and you might want to say, well, the sales and expenses, but why cash? Because again, when we talked about it, earlier, that you might get the sales in, but the cash is actually going to come, 30, 60 days after that. Or even the expenses, credit cards, for example, are a good, example of this. You go and you pay something on a credit card, you get it, it's your expense, but you're not going to actually be paying that credit card until like a month later. So that's a different cash expense. So you want to make sure that you plan for at least these 3 things: the sales, expenses, and the cash. And then the twice a year, the spring and the fall, if you put it on your calendar, you will never miss it. So if you do that, and then there's the 3-step process to it, which means that you start with the data that you have. So you sit down and you look at all the contracts that you have, the headcount that you have, all of the expenses that you currently had, and you gather all this data. And if you have that foundation, when you actually feeding that into your accounting system, that it will be said timely and accurate, this is going to be so much easier for you because you're going to have that base already. And then when you look at all of that, you want to go and take a look at what is actually changed. What do I know that has changed since I've put all of this in my accounting system, right? So there might be some new contracts that you actually signed. There might be new customers that you got. So you want to go and revise that information and make it reflect the current reality that you know has happened, but it hasn't hit your, accounting reality. And then the third piece is when it gets really fun. That's when you define and you include your goals. Again, it's if you want to grow your sales, that's where you layer that on top of it. And again, when you grow your sales, also make sure that you reflect that into expenses too. Make sure that you figure out how is that going to affect your cost if you have to, for example, hire new employees. So that's when you put it in. So that's kind of in a nutshell that the 3-2-3 planning is the basic financial planning for the business.
And you've just simplified it so much. Even a very non-financial person like me can understand it. So thank you so much. I know we have people that are joining us that are financial whizzes like Trishane, but I am not. And I think you've simplified it so that even I could follow that kind of guidance. So let's talk about the final part of your house. And for everyone that's on the call, I included the link to Kathy's financial house framework. So please take a look at that. It's a little bit of a cheat sheet of what she's explaining today. But the last part of your financial house framework is internal controls, which you say is really the security system of the house. So any recommendations on how to think about internal controls in a small business or a growing business? And are those controls different based on the size of business?
Yeah, and when we talk about internal controls, that is, like I said, in the security system of your house, and make sure that your house is protected. So essentially what it is, it's all the checks and balances that protect your business against any possible fraud, and it keeps your assets safe. And this is a piece that a lot of small businesses forget. And unfortunately, it's pretty uncomfortable to think about. But essentially what it means is you want to put the controls in place so that people don't steal from you. That's essentially what it is. And there are two stats that are really eye-opening. And so there's a Association for Certified Fraud Examiners that actually does studies on it every year, how much fraud is happening in the business. And unfortunately, small business median loss is $150,000. And check and payment frauds are 4 times higher in small businesses than in large businesses. And the reason for that is because small businesses really lack the internal controls because they either don't understand what they are, and they operate on trust, and they really trust their people. So, and it's not about freaking anyone out, but the point of this is that you want to be aware that this is a problem. And there's some basic things that you can really implement to safeguard yourself against it, right? So, and there are a couple of them. For example, you don't want to delegate all of your accounting and bookkeeping to just one person, right? There has to be a delegation and separation of duties. And what this means let's say in practicality is that you want to separate bill entering and bill paying. So you don't want to have someone enter your bills, pay your bills, and reconcile your bank statement, because there's 3 different touch points, and someone can easily fictitiously put a vendor into your system, pay them, reconcile it, and you would never know. So that's why it's good to actually have a workflow in place. Bill.com is a good system to use that you can actually put it on top of your accounting system. So someone can actually, your accountant or your bookkeeper, whoever you're using, they can put the bills in, but then you can go and say, check, I pay this makes sense, I'm paying this one, or you can delegate it to someone else. It doesn't have to be you. The point is, you should have 2-3 different people doing those type of work, doing that type of work, right? The other thing that it's useful too is you can have an approved vendor list. So you can go through the list of all the vendors that you're paying, and you can see if there's a vendor that, for example, you don't know what it is for. So you can see that, you can start questioning it. The other piece is reviewing your bank statements for anything that's irregular. And the other one is also password protecting your closed book. So for example, you should be password protecting your previous year so that no one can accidentally, pay something and push it into your previous accounting year, and you wouldn't be able to see it because it's not showing up on your current financials. The other thing is that we talked about is trends. If you know and understand the trends and you're looking at the trends in your business, you're really going to be able to see that there's something, I like to call this the sniff test. If something doesn't look right, and because you're aware of the trends and what's really happening in your business, you're really easy to be able to spot that's something weird going on. Maybe I should take a look at that.
Super smart, Kathy. I tell you what, I'm going to open it up to questions from the folks that are on the call. I know all of you probably have questions that relate to your own business, and you have the financial problem solver right here. Use this time, leverage this opportunity to ask Kathy anything about the financial house, whether it's your accounting and bookkeeping, which is the foundation, or whether it's the perhaps it's the financial analysis, which is the walls, or financial systems, which is the interior design. So please let me know what questions you have.
And while we're waiting on the questions too, if you're doing this DIY style, the two good softwares that I really like to recommend are Spotlight Reporting and Fathom. So they are going to give you the picture of how your business is actually trending. They're going to help you with your budgeting. They're going to help you with your forecasting. And the nice thing about it with Fathom is too that if you don't know for example, what profit margin means, they actually explain it to you. You can actually click on it, and it will tell you exactly what it means and how to look at it. So it's very useful for people who are doing DIY.
So Kathy, Ping just asked, can you go through those two different reports again, the Spotlight report, and maybe explain a little bit about those two reports that you would recommend?
So they're the software. They're two software, the Spotlight Reporting and Fathom. And they're very similar to how they work and what they do. I prefer Fathom because they are a US company. Spotlight Reporting is actually based in I think it's Australia, UK, and they kind of have a different way of how they look at things. And Fathom is a little bit more user-friendly. It also integrates with your QuickBooks better. But the nice thing about Fathom is that, for example, you can put your KPIs. You can also have the benchmarks of how your business is performing to other businesses in the industry. So you can see that. Also, forecasting is a little bit easier as well, the budgeting, and you can use it. It's very basic, so you won't be able to go too much into complexity of it. But if you're just starting to do that type of thing, that's a really good way to kind of get your feet wet into reporting and into financial planning.
Hey, Kathy, as somebody who just recently started a company, you talked about cash versus accrual, and you talked about the importance of establishing that kind of stuff. Can you establish an accrual system early on to manage your books? Does that make sense? Or should we really just kind of use the cash approach until we get to a certain size or a certain level or a certain financial level before we should make that transition?
I prefer that you start with the accrual, because that's you're going to be, as you grow, it's really going to be able to support you. And the nice thing about it is that you're not going to be going, oh, I'm seeing this cash, but I have the invoice that I need to pay, and 2 weeks later, And then you also have to think about that, because the nice thing with accrual is that you have everything in and you can forecast, you can plan a lot better, and it's easier. The reason why people start using cash accounting is because it's more intuitive to people and it's a lot easier, and everyone understands, I have the bank account, I either have the cash or I don't. The problem is it's just not getting you the full picture. So if you can, I really recommend you start with the accrual. It takes a little bit to get used to it, but it's going to give you so much better insights than cash will.
I love that. Trishane, you are a financial whiz. Do you have any questions for Kathy as it pertains to financial planning or analysis?
I wish I was a financial whiz, but I'm going to take that and I'm going to claim it, right? But I do have a question as it ties into your revenue stream, is just keeping up with your clients who you've scheduled, being able to reach back out to them to make sure you don't lose them down the road. You're able to have them come back. Is there a software that you recommend as far as keeping up with your clients, scheduling them, and then reaching back out to them?
Yeah, that sounds like something the CRM would do. The customer relationship management software. You have a couple of them, and it really depends what you're really looking for and how you should be and what your needs are. Like I use Capsule, for example. It's free, it's simple, and I'm able to schedule things on it. And I use ClickUp for my project management, and I'm actually starting to integrate CRM into my ClickUp so that I have everything. I like to put everything all in one. So that's why I have it in ClickUp. But the problem with that is you have to build it from scratch. That's why Capsule is a lot easier, because it's already off the shelf and you just have to start using it. But from everything that I've seen, Capsule was a really good one.
That's great. Ping, what about you? You asked some really great questions on the chat. Is there anything else you're thinking about where you'd like to ask Kathy to provide a little bit more detail?
Not at this time. She's given me a great deal to think about as I'm planning, because I would like to start up a company. And these are things that are very helpful in the planning stage just to be aware of, so that I'm not trying to figure this out as I'm going and getting further and further behind in my accounting methods or anything like that. So thank you.
Oh, good. I'm so glad. Michelle, how about you? I know you were talking before the webinar started just about what you were trying to achieve through this webinar. So do you have any questions?
Yeah, no, I think it was very insightful. Obviously, as I said, I am in finance, but looking at the fundamentals and building something from the ground up is not what I do on a day-to-day. So it was nice hearing about those, the fundamentals, the steps, and the building blocks. I really liked it, Kathy, when you spoke about, the ripple effect, that our small business is connected to the country we're living in, the people around us, and can have an impact wider than that as we grow. So that was definitely very insightful for me. I want to know, Kathy, you may have insight being both providing the fractional CFO service, but as well being, a business owner yourself. Is your advice to outsource this type of function, the fractional CFO function, particularly for me, who is someone who'd probably say, yeah, I can do it myself. However, I need to be focusing on building my business. So just your thoughts on that.
Yeah, it depends. And thank you for this question. It's actually something that I've been thinking about myself too. It's like, when I'm the CEO of my business, who's going to take care of my finances, right? Someone needs to take care of my finances. So the way how I look at it is, it's great that you have this financial knowledge, but when it comes to having a fractional CFO in your own business, the nice thing about it is that you have someone to bounce ideas off of. They have a different perspective. They might come from a different industry, and they might be able to take a look at your business from a completely different angle and advise you from a different point of view. And that's when it's really valuable, even if you are in finance and you understand finance, to have someone like this on your team, so that you speak the same language, and it's going to be a lot easier, obviously, right? But they're going to have a different point of view, and they can help you, even though you understand what you're doing, but they're going to have a different point of view, and that can really make a huge benefit to your business.
No, thank you. I absolutely agree with that. I think as a business owner, we need to feed our energy into building the business and let other people look at those angles. And, even not a business owner, even in my current day job, it's valuable to have those specialists doing what they need to do.
Yeah, exactly. And I'm a huge fan of outsourcing. For me, it's like I like to outsource as much as I can. I have a VA right now that's really helping me with things, doing the presentations. I give them, for example, I give them what I wanted, and they actually do the graphical representation. It's super helpful, because I'm able to focus on what I do best, and essentially what brings money in, versus figuring out all the details and minutia of the business.
Yeah, super smart. Bianca, you wrote a really great note in the chat. You said, "Thank you so much for showing me the right way to set up my next business. You learned the hard way how not to do things." And then you also recommended Nutshell as a great CRM. So any questions for Kathy or comments about the mistakes you made initially that you've learned from and you're correcting now in your next business? Bianca, you're on mute in case you are interested in responding. There you go.
Hi everyone. It's great to be with you all. Like I said, I learned the hard way. I went into something when I was young, and I made all the mistakes, from A to Z. But now, through the years and, watching other people, how they run their businesses, and really becoming a student of business, I've learned so much. And every day I'm a sponge. I'm constantly learning. So thank you so much for today and showing me all these little, things that I'm not aware of, or that I don't see from a different perspective. So thank you. I can't wait for, to build, not just my next business, but all of them, and know better this time around. So thank you.
Yeah, I tell you, leadership is a lifelong journey of learning.
It is.
And the best teacher is when you make a misstep, or when you make any kind of mistake, or you head in the wrong direction, learn from it. That is the very best way to incorporate learning into the next step. So
the smartest person is the one that knows that they're not the smartest person in the room, and they surround themselves with the smartest people. So
there you go. I love that, Bianca. Thank you. So I tell you what, Bianca did recommend Nutshell as a great CRM. I think there was a question about CRM. So, definitely check that out. And I want to be respectful of your time and be sure that we wrap up on time. So please join me in thanking Kathy, the founder and CEO of NewCastle Finance, for joining us today to talk about the Healthy Financial House Framework. I hope that this has helped all of you get clear on your financial strategy, so you feel confident that you're making good decisions that will result in a thriving business. And as I said, I'm Linda Fisk, the CEO of Leadership Global. And if you'd like to know more about the extraordinary women that are part of this organization, like Kathy, then please reach out to me. We help members accelerate their success by helping them define their vision, grow their leadership, expand their influence, and leave a lasting legacy. And we have members that are like Kathy, doing extraordinary things in the world. And if you'd like to learn more about this remarkable community of women leading in business, entertainment, or politics, please don't hesitate to reach out to me. Thank you, everyone, for joining. And thank you, Kathy, for leading us in such a dynamic, interesting, really compelling discussion around financial strategy. Thank you.